Hi everyone. Open up a newspaper in any westernised country at the moment and you're probably likely to see a story about the cost of living crisis and how someone can no longer afford to pay their mortgages. Now, although my background is corporate accounting and finance, there's a lot of lessons that we can take from the corporate world and apply to our own lives to help us save money and restructure the way we're spending. To find out more, keep watching. So guys, this video is about how to take some of those lessons from the corporate world and apply them to your own sort of personal spending and finance. What I want to say up front is if you have a real genuine debt problem, maybe you've got foreclosure or you're getting threatened by the bank, a lot of governments around the world will have a debt advisory service that you can ring. It's usually free of charge. Get in contact with those guys because they'll be able to give you some genuine help. If you're just looking at tips on how to save money and run a better budget, this is the place to be. So when thinking about expenditure, I love this quote from Charles Dickens. It's pretty much annual income £20, annual expenditure 19.6, result happiness. Whereas annual income £20, annual expenditure £20.6, result misery. Now the reason I love this quote, because in a corporate world, if you have an organisation where the expenditure is going to exceed the income on a long-term basis, probably wind the company up and cease trading. Now you don't have that option in your personal life, but it does really focus us on making sure that our expenditure doesn't exceed our income on a regular basis. So that's really the first lesson from the corporate world. We call it returning the company to profit. But in a personal case, it means that making sure your income is greater than your expenditure. So the first lesson, I suppose, that comes from the corporate world is to track your spending. Corporations track absolutely every dollar that goes outside the door. You know, they put it against an expense element and a cost center and maybe a worked out breakdown structure or a project. They track it, they define it, and they report on it. And that's really important because without understanding where corporations are spending their money, it's very difficult to control that spend, and it's very difficult to make logical choices about where you can save money. Same thing in your personal life. If you don't know where your money is going, it's very difficult to make a logical choice around how you can save some money. So tip number one, track your spend. Now there's many ways you can track your spend. You can set up your own accounting system. You could have a spreadsheet or some sort of database, but probably the easiest way at the moment is to go onto your banking app and have a look at whether they have a spend tracker. If they do, make sure all your spend goes through that one account so you get one view of your spend for the month. Now, if your bank doesn't have a tracker or you like using a lot of cash or you like using multiple bank accounts, you may find it's easier to set something else up. It could be an app, there's plenty of them out there, or you could just set up an Excel spreadsheet. The key is you're tracking every dollar that you spend so you can make decisions on where you're spending that money wisely. Now, once you've started tracking your spend, unfortunately, the easy bit is over. I mean, after all is said, banks will often track your spend for you. The next part is setting a realistic budget and actually viewing that budget correctly. A budget needs to be a goal. It needs to be something that you can achieve. It's not something that's so unbelievable that you're just going to forget about it in the first 10 minutes. So we need to set ourselves a realistic budget, one that we can potentially achieve and one that we can use as a target for our activities. So there's two basic ways of preparing a budget. One's called top-down, the other's called bottom-up. Top-down is basically taking that information that you've got from your spend tracking and taking 10% off. Okay, look, it does give you a budget, but one of the problems is it doesn't address a lot of those questions about where you're spending money and where you're going to spend your money in the future. Also, it doesn't address that some of the costs are a lot easier to save, say, 10% on than others. For example, electricity and utilities can be actually quite difficult to save 10%, whereas you might find it quite easy to save 10% on going out to dinner. Now, one story I can share with you from the corporate world is when I was younger, I was working with an aluminium smelter. Now, aluminium is created in a chemical process. It requires alumina, carbon, and electricity in set ratios to make a set amount of aluminium. Now, we diligently went through the budget each year. We built it from the bottom up. We started with all the raw materials. We ended up with our output and we calculated it all correctly. One year we put it to the board and a new boss came along and said, I don't like it, take 10% off. And we actually struggled to explain to the boss that you can't just reduce 10% from a chemical equation and get the same output unless you've got some sort of alchemy. Needless to say, that boss didn't last too long, and the budget that year was a bit of a mess. So bottom-up budgeting is about taking all that information you've got from your spend tracker and really kind of detailing it out. So deciding how many times you go out to dinner, how many times you go out to lunch, what your supermarket spend is, and then making some decisions based on those. So say, for example, if I only buy my lunch every second day, what's the impact of that? If we go out to dinner only 3 times a month, what's the impact of that? And what happens if we reduce our streaming services? Now, there's a little bit of logic here. You've probably got to add some other costs in there if you're reducing your lunch costs, for example. But the idea is that you're actually making logical decisions about where you want to spend your money. Now, I will give you a little bit of advice here. This can be quite emotional, but the idea is that we get that emotion out, we make those decisions together, and then we stick to that goal. Now, one of the other things I learned from big corporate is that doing a budget and just hoping that you're actually going to do exactly the same thing you're doing at the moment, spend less money, is not a realistic option. And that's because the reality is we don't actually go out trying to spend more money than we need to. We go out trying to spend as little as we can to do that activity. So it's far better from a budgeting point of view to focus on the number of times you're doing an activity and reduce those numbers rather than trying to do the same activity and hoping you're going to get it for a cheaper price. Also, at this point, remember step 2. This budget needs to be realistic. If you're going to the pub 20 times a month and you're suddenly going to say that I'm going to go 0 times a month, you're probably not going to be able to achieve that. But if you could reduce that down to 15 times a month, then it's probably a more achievable goal to set yourself. So the good news is once you've done your budget and you're happy with that and you've set your savings goals, that's actually the hardest part of the process. The rest of it gets a little easier because you've already made those emotional decisions about where you're going to spend your money. It was in the budgeting cycle. The other thing that you want to start looking at though is constant monitoring. So you've budgeted yourself a set number of activities each month. Are you achieving that? Are you going over or are you going under? Now, personally, I find it's easier to monitor this constantly through the month rather than, say, doing whatever you want for 3 weeks and then trying to spend nothing in the 4th week of the month. So constant monitoring of the budget is going to enable you to make little adjustments that are not going to have a massive impact on your lifestyle. So what I think is really important is that as you go through the month, you're monitoring your spend. Okay, so this could be coming from your bank app, or if you're doing a spreadsheet, your spreadsheet versus your budget compared to where you are in the month. So in this case, I'm 15 days into the month, so I'm about halfway through. So I should be expecting to spend about half of my budget. And you can see in my shopping sector, I've spent significantly less than half the budget. But going to the pub and buying wine, I've spent significantly more than half the budget. Also, you're going to have some situations like electric and waters, which get paid once a month or even once every second month, and it's going to be really hard to amortize those over the month. So I wouldn't worry too much about those. The reality is, and this is again another lesson from corporate, your real focus is on making sure that your bottom line is actually right. So, am I spending within my budget? Don't worry so much about the categories. We can have some movement across those. As long as my bottom line is under budget at any time in the month, I'm going to be going pretty well. So look, by the time you get to this point, hopefully things are going pretty well for you. You've got a budget that is realistic and you can stick to. You're actually monitoring your activities. You're recording your spend. That's exactly the sort of stuff that big corporates all do all the time. The last step is reconciliation. Now, reconciliation is required so that we don't forget about any spend that's coming out of our bank account, for example, we're not monitoring. So this could be anything. It could be mortgage payments, insurance payments, or anything like that. But the reality is, by doing that reconciliation step, we're going to make sure that we're actually covering all our spend, and the savings goal that we're hitting is actually the savings that's hitting our bank account. So the good news is that doing a reconciliation on your personal accounts is relatively easy. What you probably want to do is start with your bank account balance at the start of the month. You then add in any income that you've made, take away any spending that you have, and that should give you a recorded saving. Now you want to compare all that to the bank account you have at the end of the month. Hopefully it's the balance plus your savings. If there's any difference, it means you're missing something. Now you could understand what that is, and that's fine. But if you don't understand where that money is going, you need to actually go and track it down and just make sure you understand where it is, and therefore start recording it in your budget and your spending. Now, the reason why we do a reconciliation in a corporate situation is because it's actually fairly important to know that we can track all our money. Any corporation that doesn't know where their money's going is going to probably end up in a bad situation. Personally, it's also important because you really want to know where that money is going, and you really want to know that the efforts you're putting in to making savings are actually ending up being savings in your bank account at the end of the month. They're not being sucked up by another expenditure that you're not tracking. So the last lesson I have from the corporate world is to actually acknowledge when you've done something cool, when you've hit your budget, if you've exceeded your budget, go out and celebrate. It might seem a little counterintuitive to say, oh, aren't we looking at saving money? And I'm saying, no, go out and treat yourself and spend some money. But it is actually important to acknowledge the hard work that everyone's gone through in the month, to actually hit that budget and hit that target. And it actually encourages everyone to do the same the next month. So it is a really important part of the process. Lastly, I wanted to say there are a bunch of free apps out there that will help you track your budget and help you track your spend and everything like that. I haven't used any of these, so I can't endorse them or tell you whether they're good, bad, or indifferent. But what I do find is that technology can help people make it a little bit easier to achieve those goals. But the technology is not going to take away those fundamental steps that you need to go through to actually achieve what's important. So use the tech, but don't forget about the steps. So guys, there's a few lessons that we can take from the corporate world and apply it to our own situation when trying to look at the cost of living crisis, or even just saving money or trying to run on a budget. I'm Andrew Chapman. If you like my content, smash the subscribe key. If you've got any questions or comments, please put them down below, and thanks for your time.